Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, April 3rd, 2023. It's now the 1st. We start off in the S&P 500 daily chart in Demark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 4 count. And to negate that for end of day Monday on the 3rd, there must be a close below 3971.27 for the price flip to the buy setup count 1. The only levels in danger of becoming qualified is to the downside, trend factor down 1. Those are new levels. And keep going, and trend factor down 2. And then the ongoing demand lines, which for today are at 3817.30 and 3810.44, and the one up here is at 3977.13 for the 3rd, so that's an area that has a lot of support. That ongoing demand line, the baseline, and the trend factor down 1, and it would have to get underneath the cloud conversion line at that level first. And Megaphone has printed the Megaphone sell 6 end count, so we're looking for the Megaphone 7 the other way, and it would have to get under this low 3808.86 on the 13th to print the Megaphone 7, and that's the Megaphone we count on. The other ones are just leading up to the 7, so this Megaphone 6 could keep going with price and keep moving up along with new highs, but eventually we want to bank on printing the Megaphone 7 underneath this low here. The NYA top collar chart, we'll start off with the NYA to SPX ratio, basically value versus growth, and we've been watching that to see how the big fat cap megaticks are having their day in the sun. Ever since up here near the beginning of the year, you can see that whenever it goes sideways like this too, that really nothing is leaning one way or the other. So either value and growth are doing badly or value and growth are doing very well. And you can see in the thumbnail that there was a downward trajectory a little bit, but not much, and that means everything was doing well, and maybe growth had the edge over value a little bit, but it was a good day. As we can see by the New York AD line that blasted above this falling peaks trend line, had a whipsaw, went under there, did some mumbling, and really took off above the 200 simple moving average in red, the EMA 50 in green. That's really a nice show there. Same thing with the New York ratio adjusted McClellan breadth oscillator, just blasted up through all these levels here. It's now challenging some of the higher peaks up here. And NYA price went back above this red falling peaks trend line of the big W, so those are at the top of the big W patterns here. And of course a couple of whipsaws in both directions, and now we're back up above it. And the New York ratio adjusted McClellan volume oscillator, same thing. Wow, that's really up there near some of the highest peaks here. So that could have been too far too fast. We'll have to see with Monday. If it just kind of goes sideways, that would be a good thing. And the ratio adjusted summation index of the ratio adjusted McClellan breadth oscillator for the New York is moving up nicely, negative 1.94.97, and headed up. It's definitely doing well. It's above negative 250, so a vast improvement. Same thing with the New York ratio adjusted McClellan summation index for the volume oscillator, negative 389, and pointed up. It's definitely an improvement. Got a long way to go to get back to zero for both of these though, and that was one heck of a move in the volume oscillator and breath oscillators, so maybe a retreat a little bit, profit taking, and then maybe keep going, try it again. And RSI and the on-balance volume look like Marty McFly moments when his family started coming back into the picture during Johnny B. Good. Look at that, just blasted right up above the 21 EMA signal line, above 50 equilibrium, headed for this 60 green line here. On balance volume, same thing. It really dodged a bullet, staying above this trend line here, going back to October low. So that was good to see, and you can almost think of it as a symmetrical triangle, so it blasted out of that to the upside too. And boy, look at that, the McClellan breath oscillator here for the New York composite really took a jump up. I just moved the arrow and we could get rid of this bearish divergence, and that's secondary really, as the New York had a bearish divergence here with the breath oscillator for stocks only, and it looks like the breath oscillator won out on this one, so that's interesting to see. And we're definitely in bullish mode here. Gobs of breath definitely ruled over the advanced decline line in this situation. And the intermediate term volume oscillator had its own Marty McFly moment, way above its 10 simple moving average and headed back up towards zero. Same thing with the intermediate term breath oscillator, and the instruments above their 200 period simple moving average, and the NYHILO took another one of those big blasts up like back here. Definitely not as vertical as this one, but definitely a blast upwards, so let's hope that settles down. I would be happy with the 60 to 50 range now, just going sideways in there for a while and taking a rest and recouping for the next blast up. And we recently looked at the NASDAQ composite overbought, oversold indicator that includes the summation index for the composite and the NASDAQ 100. And we'll revisit that to see that the NASDAQ 100 did pop up above its zero line here, and right underneath it is its ratio adjusted McClellan breath oscillator. You can see that just skyrocketed. And the composite itself, with all the zombie companies in it, has not really skyrocketed like the NASDAQ, so still it's the big cap mega techs and the likes of them that are carrying the days. And the NASDAQ composite overbought, oversold indicator did take a nice jump up these past few days, but it's still somewhat laborious and probably should have made it way further than that. It should have looked like this probably. So again, that reflects the big fat cap megatechs and the likes of them carrying the day. And the New York overbought, oversold indicator looks the same as this, just about. And the NDXT equal weight technology sector from the NASDAQ 100, so it equal weights everything in there. That's technology, and it's about 35 of the technology stocks, and it reached a milestone that goes back to February of 22. It went above the downtrend line from there, so that's a real milestone. and it spent 2 days above this relative retracement here. So I negated the big M that was here, and it looks like it's free to roam around the cabin to the upside here. And here's the NDXT here. I'll scroll down a little bit more to get the rest of them after the P's. Look at that, everything in the red. Micron had a pullback, probably some profit taking as it skyrocketed the other day on lame forward guidance. So they're guiding 2025 as having some upside. So that's jumping an entire year, and that sent all the chip stocks into a tizzy to the upside, as you can see. Lam Research down a little bit. I think this is Pinduoduo, PDD. That was down a little bit, but that's about it. And the New York high-low chart has given us the buy signal by having the 5 EMA in blue cross above the red 10 EMA here, and then the ROC 12 plus or minus 5 from 0 is at negative 0.30, so that's about as beautiful of a buy signal as you can get. So between this one, the New York high-low, and the NDX high-low, NASDAQ 100, which is still skyrocketing straight up, this is everything doing well. So yes, the big fat cap megatechs and the likes of them are doing very well, and now some of the other left behinds are starting to get bought up, as those who weren't quick enough to get on board with the tech run are starting to look elsewhere, and those are getting bought up. So this is a good situation here. One could wait for a small pullback to see what Monday looks like, because that really was a rocket move on everything. But when it does pull back, I don't expect it to be that much, and all that's going to be is a buying opportunity if it even falls back at all. And the NYHILO's short-term KST is above 0 and just headed straight up. The intermediate term KST is starting to hook around from under 0, needs to get back above its signal line and move up. There's plenty of room to do that. Same thing with the long-term KST. It wants to turn around. It will take a lot longer than these two. So if the intermediate term can hook around and head up, that's about as good as it can get, because eventually the long term will follow. And the NASDAQ composite high-low chart is the same situation, but definitely be careful in there and pick the right ones, because there are a lot of zombie companies that need to be rolled up and rolled out of the NASDAQ composite. And you can see in orange the NASDAQ 100 price line and the NASDAQ composite in black have separated. So this is definitely a reflection of the NASDAQ 100, but others are starting to get lifted up. They say rising tides lift all boats, and that's definitely the case here. And the ROC had its negative 0.15 buy signal here, 5 EMA above the 10 in red. It's just absolutely beautiful. Again, you can wait for a pullback, but I don't expect it to be too much of a pullback. I would still call it a stock pickers market, but I don't see any harm in indexing here. We'll check in with all the monthly charts, starting with the NASDAQ 100 NDX. You can see price here, maybe better seen in the thumbnail. What a candle that was, an engulfing candle from the previous month. And you can see it's far away from this long-term trend line going back to coming out of the great financial crisis. So it's been flirting with going under there, just kept bouncing off of it, and now it's well above it. And the monthly AD line for the NASDAQ 100 is in a falling wedge pattern here, but it's above the middle line right here and headed back towards the top of the line. Let's see if it can get past that, and then if not, maybe turn around. We'll have to monitor that. Here's the one coming out of the 015 here. Maybe this pattern has been going on a few months longer than this one, you can see. And the NDX monthly COPPOCK curve has a nice hook around here, well defined, way below zero though. Has a long way to go to get up to zero, but nonetheless has hooked around and headed up. Here's the NYA monthly. You can see the price action here is all over the place. We're concerned about the indicators underneath. And the PPO has bounced off of this zone here, and it actually had a hook around, as we saw last week or so, and now has straightened out, is going horizontal right at the zero line. Let's see if we can get it to pop up above that. And the COPPOCK curve for the monthly NYA is starting to hook around to the upside. Not as pronounced as the NASDAQ 100 though. And the long-term KST over the last several months has been inching its way down towards the zero line. And I believe what we were saying here is if the long-term KST hits the zero line or goes under it, and these are pointed down, then we have a hard landing brewing. So it's undecided now, but still very far away from zero. And the S&P 500 RSI is above the 50 equilibrium line, and I use the RSI 10 for the monthly here. And S&P price is staying above this long-term support and resistance trend line, rising peaks and falling valleys. Here's support and resistance has been able to stay above that. I'm using a log scale, so I have to pay close attention to price as it will drift. And the S&P 500 monthly AD line is back up against the top of this dashed brown line. This would be a right angled and descending broadening pattern. So that's pretty close to getting above there again, or hitting it and heading down, so we'll have to monitor that for sure. And you can see that this pattern has been going on way longer than the previous one from 15 and 16. You can see how that resolved. That was in a broadening wedge pattern, and it resolved to the upside. And the S&P 500 monthly COPPOCK curve has hooked around nicely too. It's following the NDX NASDAQ 100, as a lot of those are in the S&P 500 top 25 list there, so it's following that along. And the S&P small cap index, you can see it bounced off of this horizontal support and resistance line here. There was a bit of a whipsaw for a couple months back in 2018, 2019, back when the Fed was doing quantitative tightening or something back then, one tightening too far. And you could see recently it has nailed that horizontal line and bounced up, so it's still pretty far away from that, and I believe above its 10 EMA and simple moving average. I just changed the simple moving average to 12-month there, and you can see it's slightly under that 12-month simple moving average. The S&P 600 small cap AD line shows a descending broadening wedge, known to be my favorite chart pattern, and there's a floor underneath it with this blue uptrend line going back to 2016. So it nailed that recently, and it is above its 21 EMA signal line in blue. So this should be monitored closely. If it breaks underneath that blue uptrend line here, then that's probably the hard landing scenario. Although if it did that, it would have a chance to redeem itself by getting above the top of the descending broadening wedge line, which will be descending. But still, that would be a scary situation. And the small cap COPPOCK curve is hooking around too, so that's good to see. The value line geometric index monthly chart, and they are definitely different than all the other indexes. You can read about that here. And the red line in the middle window here is the COPPOCK curve, and you can see in the thumbnail that it's hooking around nicely also. The TNX CBOE 10-year U.S. Treasury Yield Index monthly chart looking back to the Volcker era, 1980. You can see currently it closed out the month of March at 3.494. So if you round, that would be 3.5, I suppose. But nonetheless, under 3.5. So that's another milestone, as it's been above there for the last several months. And it looks like its simple moving average 12-month here in blue is at 3.4. And then the 24-month is at 2.5 down here underneath this long-term downtrend line here. The TNX RSI 14 for the monthly chart has fallen below its 21 EMA signal line in blue here, so that's another milestone there. And the MACD is starting to roll over. It's well above zero at 6, just about 5.9. And the US dollar to the TNX is flattening out here. And I was surprised that traders, investors, and especially the robots did not catch on to the core PCE year over year at 4.6%. Went down 0.1%, and now the Fed funds rate as it stands today is above this level here at 4.8 or so. So the Fed is on top of inflation. The S&P 500 support and resistance levels big board chart shows the lone gray area at the weekly high channel 3, and I normally don't use that for gray, red, or green since it was the only one I chose it. And that's right where the S&P 500 ended the aftermarket hours on Friday the 31st. So that reflects maybe going too far too fast. We'll have to see what happens Monday. I'm expecting a little bit of a pullback, but as we've seen, we are definitely on buy signals. So to the downside is the daily horizontal support from 0407 2021, the daily high channel 3, S1, and the pivot point. And to the upside in the 4100 area is R1, S&P 500 and NASDAQ 100 AD lines are doing well above their 21 EMA signal lines. There's the NDXT reflecting the jump up above that long-term up target downtrend line there. The ROC 1 went above its positive volatility line a little bit. It's at 1.44 and the positive volatility line is 1.0. ATR2 is right up against the top of its green zone again. So, but nonetheless, it's still in the low volatility zone, anything in that green zone. And the PPO Extreme took a jump up. It closed at 2.89% positive above the zero line, jumped up right above that downtrend line in blue for the PPO Extreme. I thought it might have trouble with, but it just beat both of those quite handily there. So now it has the PPO level 5 to get above 2.99%. It's getting close there. And the New York traditional McClellan breath oscillator to get back to zero would require 4,531 decliners over advancers to get back to zero. And all that in 3 or 4 days above zero. Just incredible. So it could be considered overbought a little bit, but technically can go a lot higher than that. Have a great day.